Good evening, everyone. Very warm welcome to everyone for this evening revision class. Also, I'm happy to share with you an important update that our BOS portal is live again. And if you want to interact with us, you have to follow the steps that are required. So the steps is that to join the session on Zoom, log in BOS portal with your credentials. And in that, you can go and within the BOS portal, after logging in through your credentials, you will get the Join Zoom Live Virtual Revisionary Classes November 26, that particular tab. And on that tab, when you will click, you will come to this particular class. So whoever wants to join this class now live, they can do that by going to our BOS portal and in that log in through your credentials. Then in that go to the tab which deals with this particular lecture, that is live virtual revisionary classes November 2026 exam. And then on clicking that, you will get the join Zoom option. So you can come directly to this class now and you can connect to us and have your doubts cleared live. So students, whoever are right now watching this through YouTube and such mediums, for them, this option has now just been made available to you all. So kindly make use of it and join so that if you have any doubts, you can immediately get it cleared while the class is going on. Okay, so students, we are now proceeding with a very important topic, important for exams, important for your practical knowledge whenever you are dealing in practice. So this is the topic dealing with penalties and prosecutions. Now, students, you have to understand one thing, that every taxation law has provision for punishment. But within that, one is regular punishment, like where you are filing something late, you are doing missing out something. So there is a general punishment. But at the same time, a taxation law also needs to have some severe punishment, strict punishments, because there are certain acts which either you should do and certain acts which you should not do. But if you are doing the opposite of this, and those are categorized as offenses by the law, in that particular case, you will become liable to severe punishments. So today we are going to discuss those provisions, what are treated as offenses and what are the punishments for them. So that is what is the first part of our deliberation. And then we'll move on to the appellate part, where against the order of an officer, you have the appellate remedy. Then another option or another provision, that is of advance ruling and certain miscellaneous provisions. This is what we'll cover in today's session. So let me start with this important part first. Students, kindly try to understand and also remember this for your exams. As I said, this is going to be very important when it comes to your exams, right? Okay. Now, so section 122, students, is the section which deals with these provisions, which lists down what are the different offenses. Now under section 122, there is subsection 1, 1A, 2, etc. Now majority of the offenses are listed out in this subsection 1 in various clauses. Let us understand them. So now you have to also make a note of certain important pointers, like some of these provisions are applicable only to taxable persons, but some are applicable to any person. And what is the difference? We'll understand when we discuss them. So first, list of penalties are for taxable person. Now we all know GST defines taxable person as the person who is either registered or who is liable to register. So both are covered in the definition of taxable person. So you have taken registration legitimately, or even though liable for registration, you are trying to evade the registration, but you are taxable. So both will be covered in this category, and this list of penalties will apply to them. Now, what are the punishments firstly applicable in subsection 1? So first is, you are supplying goods or service and you are doing this without issuing an invoice, or you issue an incorrect or false invoice with regard to this supply. Now see, so first offense, students, is that there is actually a supply, because the other offense will be exactly opposite of this. So you have actually sold your goods, you have actually provided some service, so there is actually a supply, but you have not billed it, you have not properly reported it, and you have not brought it into the taxation by not preparing the applicable invoice, or you have prepared an invoice, but that invoice is incorrect or false. Now you will say, sir, what can be incorrect invoice? What can be false invoice? So it is very simple. You are doing wrong classification, lower classification, or you are trying to change the nature from goods to service, or vice versa, for so that your recipient get a particular benefit. Like, as you know, in under inverted duty structure, there is restriction for input services, so you are trying to change the category of your supply and trying to show it as supply of goods. Vice versa, when you go to ISD provisions, only ITC of input service can be distributed, not of goods. So over there you are trying to change the supply of goods to service. So these are all examples where you are making an incorrect or false invoice. Second, now this case is vice versa of the first one. Here you are giving an invoice, but importantly, there is no underlying supply. So these are all cases of bogus billings, where there is no supply, but just to pass on credit, just to create an artificial chain of transactions, you are issuing an invoice, but there is no underlying supply. Then comes a third category of offense. You are collecting an amount as tax. Again, important. You have shown in your bill an amount and you have named it as CGST, SGST, IGST, UTGST. So you have collected, you have firstly charged that amount in your invoice and collected it by the name of tax. And after doing that, you have not deposited it with the government, and 3 months have passed. So if you have collected an amount as tax, whether it is right or wrong, whether let us you realize that no, this tax was not collectible, but once you have collected it, you should deposit it with the government, and the maximum time allowed is 3 months. If not done, it tantamounts to an offense. Next, you collect any tax in contravention of the provisions of this act. So now this point covers that amount which you have collected as tax, but it is in contravention. Like, you have wrongly classified an exempt supply as taxable supply, or you have classified a 5% supply as 18% supply. So this becomes collection of tax in contravention. And again, you fail to pay this to the government and 3 months have elapsed. So in both these cases, here, but your tax. So even where, let us say, a particular transaction is not leviable to tax, but once you collect it by the name of tax, you have to deposit it. Next, you either fail to deduct TDS or deduct an amount which is less than the amount which was required to be deducted, or after deduction, you are not depositing it with the government. Further, similarly, where TCS provisions are applicable, which is applicable to ECU, as you know, you fail to collect the TCS or collect an amount which is less, or after collection, you fail to deposit it with the government. Now, all the above were majority from the side of the supplier or deductor. Now comes from the side of the recipient. What can be the offense? The recipient takes or utilize ITC without actual receipt of goods, either fully or partially, in contravention of the rules. So it is complementing that bogus invoice case. So in clause 2, we were from the supplier side, that the supplier has issued bogus invoice without there being actual supply. Here, the recipient has taken that bogus ITC without actually receiving the goods. So without receipt of goods, if you are taking ITC, it becomes an offense. Next, you are obtaining a refund, which is obtained by providing fake documents or showing fake exports, that is fraudulent refund, or You are taking or distributing ITC in contravention of section 20, that is the ISD provisions. So an ISD makes a default either in taking the ITC or distributing the ITC. Next, another very, you can say this is a generic default, all above or very specific. Generic is what? You falsify or you substitute your financial records. Now, important, first word is falsify. So it means you are making wrong entries. Second, you substitute. Means what? You have a correct set of books of accounts, but when asked by the department, you are producing a different set of books. Third, you produce fake accounts or documents or furnish false information or return with an intention to evade tax. Now, here, all these things, the falsification of records or providing fake records or wrong records, all this is done with the intent to evade payment of tax. Next, you don't take registration though you are liable. You furnish false information with regard to registration particulars, either at the time of applying registration or subsequently. So you have, like for example, you have produced fake documents. You are not having any registered place of business, but you have produced a fake document for registered place of business. Or many times people, what they do, they take registration by producing fake documents because the documents belongs to somebody else. They may have acquired it fraudulently. So all these comes under this clause. Next, you obstruct or prevent an officer in discharge of his duties. Now, officer has powers of audit, inspection, search. So whenever you obstruct the officer, this clause will be triggered. Next, now this comes relating to the transporter. So you are transporting goods without the cover of documents. So document means it should be firstly having the basic document like invoice, delivery challan, and second, it should be having a supporting document like e-waybill. So if that is missing, you fall in this clause. You suppress turnover leading to evasion of tax. You fail to keep, maintain, retain books of accounts and other documents in accordance with the provisions of the law. So the law has provided what document should be maintained, up to what time period. You do not satisfy that. Next, fail to furnish information documents called for by an officer. So for audit or for any type of survey scrutiny, the officer is demanding some documents and you fail to provide that. Next, you supply, transport or store any goods which you know or you have reasons to believe are liable for confiscation. So despite of you having this information or knowledge that these goods have committed some fraud, that is they are liable for confiscation, still you are indulging either in its supply or storage or transportation. You issue any invoice or documents by using the registration number of another person. Again, a very big crime. You tamper with, destroy any material evidence or document. So some appeal is going on, or let us say at the time of search, you try to destroy some documents and which are relevant to that particular matter. Or you dispose of or tamper with any goods that have been detained, seized, or attached. So on raid, on search, some goods are identified or found that these are goods which are not having proper invoices, taxes not paid. And to avoid any type of future penalties, you try to dispose of those goods or you try to destroy those goods. That is what is covered over here. Now, for all these offenses, what is the penalty provided? You will be liable to pay a penalty of to the tax evaded or tax not deducted or short deducted or tax deducted but not paid. And parallelly, TCS not collected, short collected or collected but not paid, and input tax rate which is availed or passed on, or ITC which is distributed irregularly, or the fraudulent amount, whichever is higher. So in short, minimum is 10,000 and maximum is the tax component involved. Then comes a provision which was added later on. Now 1B students have far-reaching implications. How? In subsection 1, we saw it was applicable directly to the person who is doing the business because the word was taxable person. So it would cover directly only those person who is actually doing that business. Now 1A has expanded the scope to all other connected people. How? Firstly, it uses the word any person and then it says any person who retains the benefit of a transaction which is covered under the above clauses and at whose instance such transaction is conducted shall be liable to a penalty of an amount equivalent to the tax evaded or ITC availed. Now, 1A students is applicable to other persons like a transaction is done in the name of X, but actually the X is some retired person or some old person or an illiterate person who is actually having no knowledge, but it is actually done by me. Now, X will get covered in subsection 1 because X is a taxable person because transactions are in the name of X. But I will get covered under 1A because I am the one at whose instance such transactions conducted. So many times you'll find that in practical, when you'll handle these things, and you may have seen this even in your articleship or later on during your practice, you'll find this, that there are people who are creating bogus firms in the names of other persons. And even though the transaction is happening in other person's name, this person is the mastermind who actually ultimately keeps the benefit arising out of these transactions, that is the amount of tax evaded or the fake ITC availed. When the supplier is given relaxation from registration, then the responsibility of the e-commerce operator adds up. How? So what are the offenses for the e-commerce operator? So e-commerce operator who allows supplies of good service through it by an unregistered person, right? So you are allowing that an unregistered person is supplying goods through your portal using your portal other than the one who are exempted. So those who are given relaxation, as I said, that is fine. But if the person is not having relaxation and still you are allowing supply through your portal, then it means you are having some participation in the tax evasion. Similarly, the e-commerce operator allows an interstate supply of goods or service through it by a person who is not eligible to make it. For example, a composition dealer. So composition dealer is not allowed to make interstate supply. Now that composition dealer is registered, so it is not falling in clause. Composition dealer, even though allowed to now supplies, but if that is done, he will be liable for the punishment. Third, fails to furnish the correct details in the statement to be furnished under subsection 4 of 52 of any outward supply of goods effected penalty. Again, same minimum 10,000 and maximum is the amount of tax in. Was using the word taxable person. 1A was using any person. Now, subsection 2 is more narrowing it. It is now applicable only to the person who is actually registered under the law. What it says, registered person who supplies good service or both on which any tax has not been paid, short paid, erroneously refunded, or ITC has been wrongly availed. Now, students, you can understand this. If the person is fraud, willful misstatement, then the penalty will be 10,000 or the amount of actual tax, whichever is higher. So where there is component, the penalty will be up to 100% of tax with minimum of 10,000 in both cases. Now, student, comes the third subsection. This now increases the circumference further. Now here, those persons are made leviable to penalty who are not directly involved in the fraud, but who are indirectly supporting the transaction and eventually the tax evasion. So how? It again covers any person because they can be anyone who aids, abets any of the offenses specified in the above clauses of subsection 1. So now these are the persons who are abetting or aiding, that is, who are supporting. Now this may include transporters, this may include agents, this may include any professional who is helping them. So that is the expanse of this clause. Then clause B covers the persons who acquire possession of or in any way concerned in transporting, removing, depositing, concealing, supplying, purchasing, or in any manner dealing with goods which they know are liable for confiscation. See, similar point was there above, but it was dealing with taxable person. So where the businessman himself is doing the fraud, he is covered in clause 1. when any other person is indirectly supporting the businessman in doing the fraud, that will be covered here. Then clause C, receives or is in any way concerned with the supply of or in any other manner deals with any supply of services which he knows or has reasons to believe are in contravention. So now here it is on the recipient side. Fails to appear before the officer of central tax when issued with a summon. Fails to issue invoice in accordance with provisions of this act, or fails to account for an invoice, they shall be liable to a penalty which may be extended to maximum 25,000. Now, since we are reading CGST Act, it will be 2525. So for these offenses, the penalty is up to 50,000 rupees. Fine, students? So this is how the entire penalty provisions are in 122. Correct? Penalty for failure to furnish information. Now we are going to study something. Sorry, we have studied this called as information written in the chapter of returns. So wherever information written is required to be filed, but if you fail to file that, penalty is leviable under 123. Next, again, section 151 of the Act requires you to furnish some information to the appropriate authority, but you fail to furnish such information or return as is required, or you willfully furnish or cause to furnish information which you know is false. So here the penalty is up to 10,000, and in case of continuing offense, then the penalty will increase and it will extend to 100 for each day after the first day during which the offense continues, or 25,000, whichever is lower. So in short here, the capping is of 25,000. Now, what is section 151? It provides that the commissioner officer authorized by him may, by an order, direct any person to furnish information relating to any matter dealt with in connection with the act in the prescribed form and manner. Provisions of section 124 are tabulated here. So this is the tabular presentation of this. Now come students, very important section 125 and the most important section 126. What is 125 dealing with? It deals with general penalty, which is again capped at 25,000 per act, so it will be 50,000. Now, please understand this, students. What is this general penalty provision for? So this provision is basically, you can say, residuary penalty provision. So where you are not covered in any of the above penalty provisions, because all above provisions cover specific offenses. You can say maintain books, but that was not with the intention of evading tax, or you have not timely filed some returns, though the returns were filed, but they were not timely filed, you delayed it. So in such cases where there is no specific penalty provided above, the law may provide you, the officer may levy on you a general penalty, which is provided over here up to 25,000 per act. Now, when you read all the penalty provisions, a thought may come, sir, what is the relaxation to this? Can we have any type of concession or relaxation? So answer is yes. This section 126, students, is very important because it provides some relaxation, some concessions. What it says, the levy of penalty is subject to certain disciplinary regime which is based on jurisprudence and mainly principle of natural justice which governs international trades and agreements. Such general principles are enshrined in this section. What are they? First, no penalty shall be imposed by an officer under this act for minor breaches of tax regulations or procedural requirements or any omission or mistaken documentation which is easily rectifiable and made without fraudulent intent. So please understand this, students. So if you have done a small mistake, so there was non-compliance agreed, but that was minor. Minor in what sense? That is also explained further. So it will be, it is not of major amount. It is not actually having direct implication on tax, or there is a breach in some procedural requirement, or there is omission or mistaken documentation, and again, which can be easily rectifiable and there is no fraudulent intent, then in such cases, the meaning of penalty minor breach. So they are saying where the tax amount involved is up to 5,000. And what would be omission or mistake in document shall be considered to be rectifiable if the same is error apparent on the face of the record. So it can be clearly seen that while making a total of invoice, the total is wrong. You have put the correct tax rate, but while multiplying, you have multiplied and put a wrong figure. So these are considered as easily rectifiable mistake and apparent from record. Second principle, the penalty imposed under the act shall depend on facts and circumstances and shall be commensurate with the degree and severity of the breach. So this second condition requires that whatever penalty you are imposing, you have to be fair. It cannot happen that there is a breach of some nominal amount of 15, 20,000 and the penalty is coming as 1 lakh. No penalty shall be imposed on any person without giving him opportunity of being heard. That is SCN and proper hearing. This is the principle of natural justice. Next, the officer under this act shall impose penalty in an order for a breach of law. Regulation, procedural requirements specify the nature of breach and applicable law, regulation or procedure under which the amount of penalty has been specified. So whenever you are imposing a penalty, firstly, there should be an order. And in that order, you have to specify these things. When a person voluntarily discloses to an officer under this act the circumstances of breach, then in that particular case, before the officer has discovered the breach himself, the proper officer may consider this fact as a fact for not levying the penalty or reducing the penalty. Provisions of this section shall not apply in such cases where penalty specified under this act is either a fixed sum or is expressed as a fixed percentage. So for example, in the above section, we saw that the penalty is 25,000 or means it is neither a fixed sum nor a percentage. Hence, general discipline under 126 should be considered. Now we come to section 127. Now this gives power to impose penalty in again some specific cases. What are they? Where you're doing assessment of non-filers under 62, assessment of unregistered under 63, or you're doing summary assessment under 64, or there is a tax determination under section 73, which is non-fraud cases, or 74, which is under fraud cases, or now the tax determination is under 74A, which is the new section replacing 73, 74 both, or at the time of detention, seizure, release, that is, this is in case of where the goods are detained in transit and proper e-way bill or invoice is not found, or in case of confiscation of goods or conveyances and levy of penalties under 130. So in all these cases, if the proper officer is involved, then he can consider this fact as a fact for not levying the penalty or reducing the penalty. Of being penalty, any of the other provisions. Next, power to waive penalty or fee or both. So in some cases, whatever penalties we have seen can be waived. This power is with the government, whereby the government may either by notification waive full or part of the penalty which is levied in all the above provisions for a particular class of taxpayer and under such mitigating circumstances which may be specified. Now we come to a very important penalty, students. This part 129 is also called as the e-way bill penalty. So basically this section 129 deals with the penalty which is imposed whenever the goods are held at the time of movement and it is found that these goods are being transported either without proper invoice or without proper e-way bill. So this is again a very specific penalty dealing with this particular scenario of goods in transit. Now what does 129 says? So subsection 1 says, notwithstanding anything contained in this act where a person transport any goods or stores any goods while they are in transit in contravention of provisions of this act. And which provisions? The e-way bill provisions or the rules made thereunder, all such goods and conveyance used as a means of transport for carrying the goods and documents relating to such goods and conveyance shall be liable for detention. So while your goods are in transit, if during the transit, the officer who is empowered to take an action stops your vehicle and the officer finds that you are either not having proper invoice or not having proper e-way bill or the e-way bill has expired, in all such cases, 129 1 can be attracted. Now, what will be happen when sir goods or conveyance are detained? Then the goods or conveyance will be released only after payment of penalty. Now, how much is this penalty? So first clause says penalty which is equal to 200% of the tax which is applicable on such goods. So whatever is the tax applicable, you have to pay twice the tax as penalty. In case your goods are exempted, then what you have to pay as penalty, because now there is no tax component because the goods are exempted, on payment of an amount equal to 2% of the value of goods or 25,000 rupees, whichever is less, where the owner of the goods come forward to pay such penalty. So 200% wherever the goods are taxable, and where they are not taxable, then it is 2% of the value if the owner himself comes in front. Next, payment of penalty equal to 50% of the value of goods or 200% of the tax payable, whichever is higher. And in case of exempted goods, on payment of an amount equal to 5% of the value of goods or 25,000. This is where the owner does not comes forward. So one is where the owner comes forward, clause A is applicable. Where owner does not comes forward, clause B is applicable. Next is the vehicle may be released, maybe without paying the actual penalty, but by giving a bond and a security. So this is, you can say, a relaxation so that you may not be required to pay the entire penalty upfront. So here, upon furnishing a security equivalent to the amount payable under clause A and B in such form and manner as may be provided. So instead of paying the above amount, you can give a security of the above amount and the goods may be released. However, no such goods or conveyance shall be detained or seized without serving an order of detention. So there is a whole procedure given under Rule 138, under which the officer is required to issue relevant forms, and only after issuing relevant forms and providing a show cause and then issuing an order, only after all these processes are fulfilled, the officer can detain the goods and then this penalty will attract. Next, subsection 3. The proper officer detaining the goods or conveyance shall issue a notice within 7 days of such detention, specifying the penalty payable and thereafter pass an order within a period of 7 days. So before levying penalty, they have to give a show cause. This should be done within 7 days of detention. And after giving the show cause, within 7 days, they cannot do an recovery. They have to give the time period of 7 days to reply, and only once this period of 7 days is over and either there is no reply or the reply is not satisfactory, they may proceed to impose a penalty under clause A or B as the case. Subsection 4 says no penalty shall be determined under this subsection without giving the opportunity of being heard. So that is what is the purpose of show cause. Now, on payment of the amount referred in subsection 1, all proceedings in respect of the notice specified in subsection 3 shall be deemed to be concluded. So obviously, once you have paid the penalty, the officer has now nothing to do. Your matter will be now concluded. Now, subsection 6, what it says, where the person transporting goods or the owner of such goods fail to pay the amount of penalty under subsection 1 within 15 days from the date of receipt of copy of order under subsection 3, the goods or conveyance so detained or seized shall be liable to be sold or disposed of. So after passing the order, you should pay the amount within 15 days. Otherwise, your goods, your conveyance may be auctioned and disposed of. Provided that conveyance shall be released on payment by the transporter of penalty under subsection 3 or 1 lakh, whichever is less. So as far as the conveyance is concerned, they have kept the maximum penalty as 1 lakh. On payment of this penalty, at least the conveyance will be released. Provided further that where the detained or seized goods are perishable, hazardous, or are likely to depreciate in value with passage of time, the 15 days may be reduced by the proper officer. So these are the students' penalty provisions relating to the e-way bill non-compliance. Now, students, we move on to the second part. which is confiscation of goods or conveyance and levy of penalty. Now, this is where the goods or conveyance can be confiscated for a particular reason, but not the above reason because 129 already covers one detention. Now, here this is confiscation. Just allow me a minute. Okay. Now, students, what is this confiscation dealing with? Now, this deals with again specific type of offenses. So many of these offenses you will find overlapping with section 122. So 122 is providing for monetary penalty. This is where the authorities have power to confiscate your goods so that in case tomorrow you're not paying off the tax, they can dispose of these goods for recovery. Now, when can goods and conveyance be confiscated? One, where any person supplies or receives goods in contravention of any of the provisions of this act with the intent to evade payment. So you are supplying goods without raising invoice. So this is what is with the intent to evade payment of tax. You have supplied the goods and you have contravened the law. Second, does not account for any goods on which he is liable to pay tax. So you have purchased certain goods, but you have not reported it and you have not paid any tax. Supplies any goods liable to tax under this act without applying for registration, contravenes any of the provisions with the intent to evade payment, or uses any conveyance as a means of transport for carriage of goods in contravention of the provisions of the act, unless the owner of the conveyance prove that it was so used without the knowledge or connivance of the owner himself. So, in all these specific cases of offenses, what does the law says? Such goods or conveyance shall be liable for confiscation and the person shall be liable for penalty under 122. So penalty anyways we studied above for similar for these offenses. Here this provision empowers the authority to it empowers the authority to take action in the form of confiscation. Just a minute, please, students. Sorry, students. So these are the cases where even though the penalty is leviable, but as a precautionary measure, the Act has allowed the officer to first confiscate your goods, and even where any conveyance is used for transporting them, the conveyance also. Now, wherever confiscation of goods or conveyance is authorized by this Act, the officer adjudging it shall give to the owner of the goods an option to pay in lieu of confiscation. So, instead of confiscating goods, the officer will allow a fine, a monetary amount, so that this confiscation can be avoided. Provided that such fine leviable shall not exceed the market value of the goods confiscated, less the tax chargeable thereon. Provided further that the aggregate of such fine and penalty leviable shall not be less than the penalty equal to 100% of the tax payable. And provided also that where any such conveyance is used for carriage of goods or passengers, the owner of the conveyance shall be given an option to pay in lieu of confiscation a fine equal to tax payable on the goods being transported. So this provides the maximum amount up to which this fine can be levied. Further, no order for confiscation of goods or conveyance or imposition of penalty shall be issued without giving reasonable opportunity. So principle of natural justice. And where any goods or conveyance are confiscated under this Act, the title of such goods and conveyance shall be with the government. This is the most important point. Student, this is the difference between detention and confiscation. In the previous section 129, they were detaining goods and conveyance both, but it was only detaining, which is a temporary act. Here, confiscation means now the property will vest with the government and they can do whatever they think appropriate with the goods or the conveyance. Further, the officer adjudging the confiscation shall take and hold possession of the things confiscated, and every officer of police, on requisition of such officer, shall assist him. So obviously, this will be required because maybe the person may not be very easily giving you the custody of the goods or conveyance. So you may require some police to be present. So this section allows you to take the services of police. Further, the officer may, after satisfying himself that confiscated goods conveyance are not required in any other proceeding under the Act, and after giving reasonable time not exceeding 3 months to pay fine in lieu of confiscation, dispose of such goods or conveyance and deposit the sale proceeds thereof with the government. So these are the provisions relating to confiscation of goods or conveyance. Next, confiscation or penalty not to interfere with other punishments. So as you can understand, so wherever the above confiscation is happening, that is independent of all the other provisions of the law. So without prejudice to provisions contained in Code of Criminal Procedure, no confiscation made, penalty imposed under this provision of this Act, or rules made shall prevent the infliction of any other punishment to which the person is liable under the provisions of this Act or under any other statute. So not only this Act, if you are liable under other statutes also, this confiscation will not infringe the rights of the other statutes. Now moving ahead, certain more offenses. Now these are under 132. What it says, whoever commits or causes to commit and retain the benefits arising out of any of the following offenses. Now again, students, will find certain offenses similar to what we covered in the above provisions. Now what are they? Supplies goods or service without issuing an invoice, in violation of the provisions and with the intention to evade tax. So this is again common. Issues an invoice without supply of goods, again in goods or service, again in violation of the principles, and thereby leading to what? Wrongful availment of ITC. So where I'm giving bogus invoice without actual supply, so obviously the intent is very simple, so that I can pass on bogus credit. Also, next is on the recipient side, where the recipient avails the ITC using the above invoice, and this ITC is not having proper underlying supply, or fraudulently avails ITC without any invoice. So either there is no supply, still on the basis of bogus bill it is done, or without invoice you are directly taking the credit. Next, collects any amount as tax but fails to pay to the government within 3 months. evades tax or fraudulently obtains refunds, and where such offense is not covered in above clauses, falsifies or substitute financial records or produce fake accounts, or acquires possession of or consent with such goods which are liable for confiscation, or receive or is in any way concerned with supply, or in either matter deals with any supply of service which he knows are in contravention of the provisions of this act, or attempts to commit or abates any of the above offences. So you'll find, students, again similar to 122. Then what is the difference? The punishment. So shall be punishable in cases where the amount of tax evaded or the amount of input tax wrongly availed or utilized, or the amount of refund wrongly taken exceeds 500 lakhs, that is 5 crores, with imprisonment of a term which may extend to 5 years. So now, besides penalty, besides confiscation, the third consequence could be imprisonment. And here, where the amount of tax or the ITC or the refund is exceeding 500 lakhs, that is 5 crores, the punishment is 5 years of jail. Second, in case where the amount of tax evaded or ITC wrongly availed or refund wrongly taken exceeds 200 lakhs but does not exceed 500 lakhs. So between 2 crore to 5 crore is if the amount is, then the jail term is up to 3 years. And third, in the case of offense covered in clause B, where the amount of tax evaded or the amount of input tax wrongly availed or the refund exceeds 100 lakhs but does not exceeds 200 lakhs, that is between 1 crore to 2 crore, then the jail term is up to 1 year. And in cases where he commits or abates commission of an offense specified in clause F, he shall be punishable with imprisonment of a term which may exceeds to 6 months. So what is the additional point, student, under 132 is the jail term provided. So we had penalty under 122, we had confiscation under 130, and now we are dealing with imprisonment under 132. Now, further, subsection 2 says where any person convicted of an offense under this section is again convicted of an offense under the same section, then he shall be punishable for the second and for every subsequent offense with 5 years term. So for the first offense, depending upon the amount involved, the term could be 5 years, 3 years, 1 year, 6 months. But when it is a repeat offense, then irrespective of amount, the jail term will be 5 years on every subsequent repetition. Further, the imprisonment referred to in clause 1, 2, 3, that is 5 years, 3 years, 1 year of subsection 1, and then subsection 2, which is for repeat offenders, shall, in the absence of special and adequate reasons to the contrary, be recorded in the judgment of the court, be for a term not less than 6 months. So if there is a contrary judgment and the judgment allows you a relaxation, then it may be reduced. Notwithstanding anything contained in Code of Criminal Procedure, all offences under this act, except the offences referred to in subsection 5, shall be non-cognizable and bailable. So now, except what we are going to read in 5, others are bailable. Bailable means when the officer arrests you, immediately you can apply for bail. But what is covered in subsection 5 is not non-cognizable. So what is subsection 5 covering? The offense is specified in clause A or B or C or D of subsection 1 and punishable under clause 1, that is where the amount exceeds 5 crores. So for 5 crore students, the provision is it shall be cognizable and non-bailable. Means what? That here the arrest can be done by the officer without any warrant. That is what is cognizable. And second, non-bailable means now the officer will not be empowered, or any person from the department will not be empowered to give you the bail. For the bail here, you'll have to go to the magistrate, that is to the court. A person shall not be prosecuted for any offense under this section except with the previous sanction of the commissioner. So for all the above, you have to take sanction from your higher authority, that is commissioner. Explanation: for the purpose of this section, the term tax shall include amount of tax evaded or the amount of ITC or refund under the provisions and the SGST and the IGST and cess. So it means the amount, the quantum that we have to check is not of one tax or one act, it will be of all acts combined. So this is a very important point. that you have to understand and remember that the term of imprisonment is 5, 3, and 1, and this imprisonment shall be for a minimum period of 6 months in the absence of special and adequate reasons to the contrary to be recorded in the judgment of the court. Correct? Now, this part is important. Thus, generally, arrest can be made under GST law only when the amount exceeds 2 crore or where a person is committing it repeatedly. However, whoever issues or causes to issue and retain the benefits arising out of issuance of an invoice without supply in violation of the provisions leading to wrongful availment of ITC and the amount is exceeding 1 crore, it shall also be punishable with 1 year jail term. We have seen this. Now, what is cognizable and what is non cognizable? So, cognizable, students, please understand, means where the offenses are very severe and the police officer are having the power to arrest even without an arrest warrant and to start an investigation without the permission of the court. So where offenses are severe, they are called as cognizable, whereby the police officer, or here in this case, even the GST officer, can make the arrest without having a arrest warrant. Whereas if the offenses are non-cognizable, it means they are less serious offense. And in this case, the police officer cannot make the arrest without a arrest warrant. So here, for arrest, you have to first have a warrant, and also the investigation cannot be initiated without the court order. So here, you can arrest a person, but first you require arrest warrant. Second, you have to immediately produce it to the magistrate, and the magistrate will take a call whether the arrest should continue or for the time being the person should be released. So that is where the differences. Now here, what is considered as severe? Offenses between A, B, C that we saw above, A, B, C, D, and where the amount is exceeding 5 crore, this is considered as severe. So these are non-cognizable and non-bailable. Remaining the other where the quantum is less than 5 crores, these are all non-cognizable and hence bailable. Correct? Okay, that's it. Now, liability of the officers and certain other persons. So where any person is engaged in connection with collection of statistics under 151 or compilation or computerization thereof, or if any officer of central tax having access to information specified in subsection 1 of 150, or if any person engaged in connection with provisions of service on the common portal or the agent of the common portal willfully discloses any information or the content of any written furnished under this act or rules made thereunder. So now here there is obligation on the officer who is in control of the data, that if they are disclosing any information or the contents, and this is done otherwise than in execution of the duties under the said section or for the purpose of prosecution for an offense under this act or under any other act for the time in force, then they shall be punishable with a term which is up to 6 months or a fine which may be up to 25,000 or with both. So where officer is giving away the data but is not having the authority to do so, then the officer is liable for this punishment. Now, a person shall be prosecuted under this section first in case if the person is a government servant with the previous sanction of government only, and other than government servant with the previous sanction of commissioner. Cognizance. No court shall take cognizance of any offense punishable under this act or the rules made thereunder except with previous sanction of the commissioner. And no court inferior to that of magistrate of first class shall try such offense. So whenever any person is arrested, you have to take to the magistrate of first class and not below that. And every action has to be with the sanction of commissioner. Now, students, this section is most crucial. Whenever any severe action is proposed, or if the person is to be prosecuted, then the general requirement is that prosecution can be done only when it is proved that the person has a guilty intention. In short, the person has done that particular thing knowingly about the consequences and with a very fraudulent and cunning mind. However, proving this practically, students, is very difficult because what is inside a person's mind has no machine to be proved. Hence, this section 135 says that the court shall presume the existence of this. It means this most important component, which is required for prosecution, is now to be presumed by the court. So now the obligation is on the taxpayer to prove otherwise. It means whenever you will be arrested, yeah. So now the situation is this, that whenever a person will be arrested and a prosecution has to be carried against the person, then the courts, the department will be considered as correct in their action because it is a presumption by law that the person is having a guilty mind. Now, it will be on the person to prove that the person had no such mental state. It means the person will have to justify his innocence or his uh, non-culprit mind to get out of the prosecutions. Next comes relevancy of statements. Now, whenever any proceedings are happening, statements are recorded of the persons. Many times these are done by the officers, either at the time when they are visiting your premises or you are called with them. Now, the question is, how much can these statements be considered as a valid evidence whenever these statements are to be taken as the basis of any action in the court? So, for this, Section 136 of the Act has made out some very specific provision. It says that a statement made and signed by a person on appearance in response to any summons during the course of any inquiry proceeding shall be relevant for the purpose of proving the truth of the facts which it contains in any prosecution for an offense. So, firstly, whatever statement has been taken from you, which is signed by you, and it is taken under section 70, that is summons, that will be considered as relevant when when the person who made the statement is dead, cannot be found, or is incapable of giving evidence, or is kept out of the way by the adverse party. So, where the person cannot come to the court for some reason, like the person is dead, person is not traceable, or the other party has somewhere, let us say, kidnapped and kept the person outside this whole matter, or whose presence cannot be obtained without sufficient delay. The court considers this as it is now unreasonable, we cannot wait beyond this. In such cases, if that person had earlier recorded a statement in summons, that will be considered as valid. Second, when the person who made the statement is available, so the person is examined as witness in the case before the court, and the court is of the opinion that having regard to the circumstances, the statement should be admitted as evidence in the interest of justice. So even where the person is available and it is examined as witness in before the court will now decide, and where it feels that in its opinion, the earlier statement recorded during summons has to be taken as the basis, the court may take that earlier statement as the evidence. Now, offenses by companies. Now, here a question comes that company is a non-living person. Now, how can you penalize a company with imprisonment? So for that, this provision is important. It says, when an offense is committed by a person who is a company, that is a body corporate, and this also includes firms, other AOPs, etc. Every person who at the time the offense was committed was in charge, was responsible for the conduct of the business of the company and the company, both shall be deemed to be guilty and shall be liable to be proceeded against. So, in short, this is creating a vicarious liability on the officers in charge of the company at the time when the offense was committed. However, there is a carve out. where an offense that has been committed by the company and is provided that the offense has been committed with the consent or connivance or is attributable to any negligence on the part of director, manager, secretary, or other officer, such director, manager, secretary, or other officer shall also be deemed to be guilty. So here, if any employee, if any director of the company is aware of the offense and the offense is committed with their consent or with their connivance, in that particular case, that person will also be made liable. Further, where an offense under this act has been committed by a taxable person being a partnership from LLP, HUF, or trust, the partner, karta, managing trustee shall be deemed liable and shall be liable to be proceeded against along with the original firm, HUF, etc. Further, an explanation to this section, director in relation to a firm means the partner. Next, compounding. Now, what is compounding, students? As the name suggests, many times it may happen that in the same transaction, multiple offenses may have been committed. So you cannot uh, punish the person multiple times. So the law provides a provision for consolidating the offenses and levying a single penalty. Now, what are the provisions? Any offense under this act may either before or after the institution of prosecution be compounded by the commissioner on payment by the person accused of the offense to the central government as the case may be of such compounding amount in such manner as may be prescribed. So what they are saying that wherever you are uh, considered as guilty of an offense, then these commissioners shall be having power to give you an amount which you need to pay in lieu of that particular offense. However, provided that nothing contained will apply to a person who has been allowed to compound once in respect of offenses specified under 132. Second, a person who has been accused of committing an offense under clause B of subsection or of 132. Third, a person who has been convicted for an offense under this act by a court and any other class of person. So these people will not get the benefit of compounding. Provided further that any compounding allowed under the provisions of this section shall not affect the proceedings if any instituted under any other law. So other laws will be independent and this compounding will not reduce their impact. The amount of compounding under this section shall be such as may be prescribed, subject to minimum but not less than 25% of the tax involved and maximum not being more than 100% of the tax involved. Next, on payment of such compounding amount as may be determined, no further proceedings shall be initiated under this act against the accused person in respect of the same offense, and any criminal proceedings which is already initiated shall be abated. So once you have made the payment of this compounding amount, obviously the proceedings has to be dropped. Perfect. So students, these are the provisions relating to offenses and their corresponding penalties. Now we come to the part which deals with ethics. Now we all know that be it any profession, we as professionals hold very high position in the eyes of the taxation authorities, in the eyes of courts, and also in the eyes of general public. And that is where this part, that is ethics, plays a very, very important role. So basically, what are ethics? You can say these are rules, these are some guidelines which provides a framework for distinguishing between right and wrong, guiding decision making, and determining what is considered morally acceptable in a given context. So ethics are fundamental to the effective functioning of any taxation system. This also holds true for GST. Now, what are the ethics which are provided for us? So, the professional behavior of a chartered accountant is governed by a set of ethical guidelines principle known as Code of Ethics. So, you also know that our ICAI has provided this, and this is also part of your syllabus at finals. So, chartered accountant has to abide by this. It encourages the chartered accountant to be honest, fair, and professional in their working, and advocates to follow the rules to ensure that they are doing right things for the client and at the public at large. Now, what are some important provisions relating to this ethics? Let us discuss them. Chartered accountant in practice would be deemed to be guilty of professional misconduct under clause 7 part 1 of second schedule to the C Act if he does not exercise due diligence or is grossly negligent in the conduct of his profession duties. Further, as per clause 8 of part 1 of second schedule to the C Act, a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he fails to obtain sufficient information which is necessary for expressing an opinion, and a chartered accountant need to follow ethical conduct while discharging his professional duties under GST, that is compliance, certification, advisory, etc. Further, he should maintain professional knowledge and skill at the levels required to ensure that the client or employer receives competent professional service based on latest position of the law. Chartered accountant plays a crucial role in ensuring GST compliance within their organization, client's organization. This involves assisting in the process of obtaining registration, structuring transactions, conditions stipulated in making agreements, etc. Generally, chartered accountants are responsible for ensuring the maintenance of accurate and detailed records of all GST-related transactions. This includes invoice, receipts, etc. So, another major responsibility of the chartered accountant in the realm of GST is to act as a tax advisor. This entails a comprehensive understanding of clients' business operations and goals. Chartered accountant must assess the impact of GST on various aspects of the business, including supply chain, pricing strategies, and financial reportings. So, students, these are some important ethical points. Next, whenever you are issuing a certificate or report, what is given? The certification of the amount of ITC claim at the time of registration, voluntary registration or switching to regular tax paying, etc., or coming into tax paying status as required in section 18. So if you remember, we studied this in section 18, wherever you are shifting from non-taxable to taxable or from exempt to taxable or from composition to regular, you means the client is entitled to avail ITC of the goods in stock, and you as a chartered accountant are required to certify their declaration wherever the tax component exceeds 2 lakhs. Now here in this relation, what is provided? The chartered accountant should examine the books of accounts, other relevant documents, records of the taxpayer, and provide a reasonable assurance that the amount declared in the form has been accurately drawn from the books. Next, wherever you are giving certificate in relation to these scenarios, that is where sale, merger, etc. happens, and the person wants to transfer the ITC balance in form ITC02, again the chartered accountant is required to examine the books of accounts, other relevant documents, records of the taxpayer, and provide reasonable assurance that the sale, merger, amalgamation has been done in accordance with the provisions of the law. Further, wherever you have to give a certification that there is no unjust enrichment, this is in case of refund, again at that time, what is the requirement? The certification of the CA should be based on meticulous examination of books and other relevant document records supporting the refund claim, thereby providing a reasonable assurance that the incidence of tax, interest, or other amounts classified as a refund has not been passed on to any person. Next, in case of certification of amount of ITC to be reversed at the time of cancellation of registration or shifting from taxable to exempt or from shifting from regular to composition, again the certification should be based on meticulous examination of books and other relevant documents of the taxpayer, and thereby providing a reasonable assurance as regards the correctness of the quantum. Again, whenever you are appointed as an auditor under section 66, which students, we studied section 66 is dealing with audit by a special audit where the department will appoint either a CA or a CMA. So in such cases, again, what is required is the chartered accountant must approach the special audit with an unbiased and impartial mindset, free from any external influences or conflict of interest. This ensures that the audit findings are based on factual evidence and professional judgment rather than personal bias. You should first go through the terms of reference provided by the GST authority to understand the scope and objectives of the audit. This document outlines the specific areas and tax periods to be audited. He should conduct a comprehensive review of all relevant documents, including financial statements. So students, these are the specific requirements put in terms of the ethics. Fine. So here there are some case studies. I'll request you all that you may go through them so that you will get a broad idea as to what is the expectation. So with this, we have completed this chapter in thorough detail. Now let us go to another important chapter, Now, this chapter deals with the rights of the taxpayer once any action is initiated by the department. So, whenever department has done your audit and has passed an order of levying any tax or duty under 7374, or has conducted any search and on the basis of that passed an order under 7374, or has done your assessment in the category of non-filers or unregistered. So against the order of the authority, what are your recourses available? So the recourses available are either you file appeal to the higher authority, or you go to the same authority who has passed the order for revision. So broadly, there are two options. So against the order passed by the adjudicating authority, you go to the higher authority, which is the appellate authority, or order passed by an officer subordinate to a revisional authority, you can go to the revisional authority. Now, against both these authorities' decision, the next stage is the appellate tribunal. Now, within appellate tribunal, you have two benches, state benches and the principal bench, which is the national bench. Where the order is passed by the state bench of the appellate tribunal, you will go to High Court. Where the order is passed by the principal bench or the order is passed by High Court, you will go to the Supreme Court. So this is the hierarchy. So first is adjudicating authority, then the first appellate authority, then the second appellate authority, then High Court, Supreme Court, or where the second appellate authority is the principal bench, then directly the Supreme Court. Now, with this structure, let us understand the details. So first is where the order is passed by the adjudicating authority. What is your first stage? First stage is the appellate authority, who is generally the commissioner appeals, additional commissioner appeals, or the joint commissioner appeals. So this is your first appellate authority. So against the order passed by the adjudicating authority, you file appeal with the appellate authority under section 107. Now, what are the provisions? What are the orders appealable? So you can go to appellate authority appealing against which order? So appeal against any decision order passed by an adjudicating authority, either under CGST, ISGST, UTGST Act, will come to this authority. You have to note that only the person who is aggrieved by the order can file the appeal. Further, the appeal must be against the decision or order passed under the Act. So you can go to the appellate authority only if you are the aggrieved person and the order is passed under any of the acts, that is CGST, SGST, or IGST. Time limit. You can file appeal within 3 months. Yes, you can file appeal within 3 months from the date of communication of the order, and beyond 3 months, further 1 month is allowed as a condonation, provided the appellate authority should be convinced that this condonation is reasonably allowable. Now, how you have to file the appeal? So in GST, everything is online. So appeal is also to be filed online, and this has to be filed using the APL 01 form, which you have to upload electronically, and you will get a provisional acknowledgement immediately. Now, after this APL 01 file is form is filed, and you have received this acknowledgement, this is the temporary filing of the appeal done. Now, your appeal will be checked, and if your appeal is found to be in order with all the requirements fulfilled, like the pre-deposit, like the time limit, then the officer, the appellate authority, will issue GST APL 02, which is your final acknowledgement. Once this APL 02 is issued, then you can consider that your appeal has been filed, and there will be now stay on the recovery. The recovery will not happen till this appeal is disposed of. Now, besides online appeal, there is also a provision where it allows you to file this appeal manually along with the relevant documents, but when? Only when the commissioner has notified this, or the same cannot be filed electronically due to non-availability of the decision or the order on the portal. So when you can file manually, one, in cases where commissioner allows, two, where the order is served on you manually and it is not available on the portal. Now, where the decision order appeal against is not uploaded on the portal, the appellant must submit a self-certified copy of the said decision or order within a period of 7 days from the date of filing the appeal. The final acknowledgement indicating appeal number shall be issued by the appellant authority to an officer authorized by him in this behalf in form APL 02. So that procedure is same. So wherever you are doing the filing the appeal manually, or the order is manual with you, you have to give a self-certified copy within 7 days. Now comes the important point, that is pre-deposit. Pre-deposit, students, is very critical to filing an appeal. This is done to ensure that people unnecessarily do not delay the procedure and there is some seriousness. So pre-deposit is to be made of 10%, 10% of the disputed amount. So let us say the order was passed of rupees 1 crore. Out of that, 25 lakhs you are accepting and 75 lakhs you are disputing. So 25 lakhs you have to pay full because that you are accepting. And for 75 lakhs where you are disputing, you have to pay 10% of 75 lakhs as pre-deposit, that is 7.5. Only when this pre-deposit is done, then only you will be entitled to file the appeal and the appeal will be acceptable. Now, similar to the taxpayer, even the department can file the appeal. Now, when the department will file the appeal, when the order is in favor of the taxpayer, so it is against the department. And wherever the department feels that the order is prejudicial to the interest of the revenue, the department will go in for appeal. How? So the commissioner may either on his own motion or upon request from the other commissioner, that is from SGST, call for and examine the record of proceedings in which adjudication authority has passed any decision and to satisfy himself about the legality of or the propriety of such decision. Now, once they feel that the decision is not correct, they can proceed with appeal and the time limit is within 6 months from the date of communication of the decision or order. So for us, the time limit is 3 months. For them, the time limit is 6 months. And again, they are also allowed a condonation period of 1 month. So beyond 6 months, they can also have 1 month extension where they have reasonable cause for being late. Now, for them, the form is GST APL 03. So for us, it was APL 01. For them, it is APL 03. However, again, which is filed electronically, again, it can be filed manually when the commissioner has so allowed or where the order is not available on the portal. So there is no option but to file it manually. Next, where the decision or order is uploaded on the common portal, a final acknowledgement indicating appeal number shall be issued by the appellate authority and it will be in again form APL 02. So like how we were getting the acknowledgement in APL 02, they will also get in APL 02. Again, where the order is not uploaded, they have to submit a copy of the self-certified order within 7 days from the date of filing the appeal. Fine. Application to be treated as appeal. Now, such application shall be dealt with by the appellate authority as if it were an appeal made against the decision of the adjudicating authority. So like how we are filing appeal, the department files application, that application is to be treated as appeal. Most important, there is no requirement of making pre-deposit by the department. So when we as a taxpayer go for filing the appeals, we have to meet the requirement of pre-deposit. But where a department is going in appeal, they don't have to pay the pre-deposit. Now, what is the appeal process? So the duty of the appellate authority is they have to follow the principle of natural justice, such as they should allow proper hearing to the appellant, allow reasonable adjournment, which should not be more than 3, also allow additional grounds of appeal if the omission of that ground from the grounds of appeal was not willful and is reasonable. Further, orders of the appellate authority, what the appellate authority can do, they can make further inquiries if required and they will pass an order which is called as order in appeal. Now, the appellate authority, what can do? They can confirm, modify or annul the decision or order which is appealed against. However, they shall not refer the case back to the adjudicating authority. It means whenever an appeal is filed with the appellate authority, they themselves has to make the final decision, either confirm it or modify it or cancel it. But they cannot send back the matter. They cannot remand back the matter to the lower authority again. Further, the appellate authority can increase the rigors of the order appealed against by enhancing any fee or penalty or fine in lieu of confiscation or confiscating goods of greater value. But this can only be done after they have given a reasonable opportunity. So wherever they want to increase your penalty fine, they will have to give you notice. Further, if appellate authorities of the opinion that any tax has not been paid, short paid, erroneously refunded, or where ITC has been wrongly availed or utilized, no order requiring the appellant to pay such tax shall be passed unless appellant is given a show cause notice in accordance with the time limit of 73, 74, and now 74A. So where appellate authority feels that something is unpaid or wrong ITC is availed and it was not part of the original notice, here appellate authority will issue a separate show cause notice. The appellant may at any time before issuance of the said show cause notice or before issuance of order in respect of any appeal filed in APL 01 or 3, file an application for withdrawal. So wherever appeal has been filed, you are allowed to even withdraw the appeal. However, where final acknowledgement has been given in APL 02, the withdrawal of the said appeal would be subject to the approval of the appellate authority. So where APL 02, that is final acknowledgement, is not there, you can yourself withdraw the appeal. But where acknowledgement is there, you can withdraw the appeal only with approval of appellate authority. Further, any fresh appeals filed by the appellant pursuant to such withdrawal shall be filed within time limit specified in A. So if after withdrawing you want to refile it, it has to be done within the time limit. Now, the order which is to be passed by the appellate authority should be a speaking order, which means it should specify all the points on the basis of which it has arrived at the decision. The law provides an advisory time limit of 1 year from the date of filing appeal or deciding the appeal. So the not strict, but you can say recommendatory time limit is given that the appellate authority may conclude the matter within 1 year from the date of filing the appeal. Now, this period will be extended if in between this period there was any stay by a court or a tribunal, then that period will be added in this period of 1 year, and to that extent your period will be enhanced. Now, once you have finalized the appeal order, you have to communicate the order to the appellant, to the respondent, and to the adjudicating authority. So 3 people will get the copy of this order. Further, the copy of the order shall also be sent to the jurisdictional commissioner or the authority designated by him in this behalf. So that is for the records. Now, every order passed by the appellate authority shall be final and binding on the parties unless they go to the higher forum in appeal. Now, who are the appellate authorities? So, if the decision order against which the appeal is to be filed is passed by JC, the appellate authority will be Commissioner Appeals. And if the order which is to be appealed against is passed by a deputy or assistant commissioner or superintendent, then the appellate authority is JC Appeals. So, depending upon who has passed the adjudicating order, the appellate authority obviously has to be at the higher pedestal. So, for order passed by additional or joint commissioner, the appellate authority has to be commissioner. And where it is filed by deputy or assistant commissioner or superintendent, then the appellate authority will be the JC Appeals. So here the entire provisions are summarized in a tabular form. Next comes revision. So instead of challenging the order at higher authority, you can take up the matter for revision. Now what is to be done? So the GST law provides a mechanism for revision. You have a revision authority, which may either on its own or upon information received by them on request of the SGST Commissioner, call for and examine the records of proceedings. Now, on examination of the records, if the revision authority is of the view that the decision passed by any of the authority subordinate to him is either erroneous, insofar as it is prejudicial to the interest of revenue and it is illegal. Second, has not taken into account material facts, whether available at the time of issuance of the order or not, and is in consequence of an observation by the CNAG, he may, if necessary, stay the operations of such order. Thereafter, so first they will stay the operation of the order, now they will go for revision. The revision authority may make such further inquiry as may be necessary, pass such order as it thinks fit and proper, including enhancing, modifying, or annulling the said decision. Here, decision includes intimation given by an officer lower in rank. Along with the order, the authority shall also issue a summary of the order clearly indicating the final amount. Now, if the authority decides to pass an order which is likely to affect the person adversely, again, an opportunity of being heard has to be given. Every revision authority subject to further appeal with the tribunal, High Court, Supreme Court. So whatever order revisional authority has passed can be challenged at higher forums. Now, the power of revision is subject to the condition that non-appealable orders and decisions under 121 cannot be revised. Now, revision authority shall not exercise the power of revision if the order sought to be revised has been subjected to further appeal. Period of 6 months from the date of communication of order has not yet expired, or more than 3 years have expired after the passing of the decision or the order. So, 6 months minimum and maximum 3 years. Next, the order has already been taken for revision already, or the order sought to be revised is itself a revision. In these cases, revision authority cannot revise. Revision authority may still pass an order on any point which has not been raised and decided in appeal before the higher authority, before the expiry of 1 year from the date of order in such appeal, or before the expiry of 3 years from the date of initial order, whichever is later. So where so wherever any matter has gone to the court or tribunals, but some part of that order is not taken in that appeal, that part of the order can be revised. Otherwise, it cannot be revised because it has gone to the higher forum. Now, you are given 3 years for the revision. Now, what time will be excluded while counting this 3 years? So simply, wherever the matter is taken at a higher forum, and whatever time is spent between the date of decision of the tribunal and the date of decision of High Court, or between the date of decision of High Court and the date of decision of Supreme Court, shall be excluded while counting the period of 3 years. So in short, till whatever time the matter was pending at higher forum, your time limit of 3 years will be extended. Where issuance of revision order is stayed by the order of court, tribunal, etc., again the period of stay will be added to your 3 years period and your total time will be extended. Now, who can be the revision authority? Where the original order is passed by addition or joint commission, revision authority can be principal commissioner or commissioner. Where it is passed by deputy commissioner, assistant commissioner, or superintendent, revision authority can be either additional commissioner or joint commissioner. Now, after you had appealed to the first appellate authority in section 107, and the first appellate authority had passed an order either in your favor or in the department favor. Now the next forum for appeal is the appellate tribunal. So this appellate tribunal, which is now recently just formed and has started its operation just very recently. Now the appeals with this appellate forum is what is called as appeals with the appellate tribunal. So after the first appeal, that is with the appellate authority, who is generally the joint commissioner or commissioner, the second appeal is with the tribunal. Now, when you talk about tribunals, and as I said, it is just started in GST after 9 years of GST. So this tribunal shall be formed as per the strict provisions of the Act, and there are two benches. One is the principal bench and one is the state bench. A principal bench is at New Delhi, which consists of the president, one judicial member, one technical member state, one technical member center. And on the request of state, the government may by notification constitute such number of state benches and at such places as may be recommended. So on the basis of this, multiple state benches are formed. So depending upon the total size of the state, the number of state benches will be there. So principal bench is only one, which is at New Delhi, which has 4 members. State may have multiple benches. Again, in the benches, there will be 4 members, 2 judicial and 2 technical. So in both the forums, there will be 4 members. Now, what is the jurisdiction? The principal bench and state bench can hear appeal against the order passed either by the appellate authority or by the revision authority. So against both order of section 107 or 108, we can go to the tribunal. However, the cases in which any one of the issue involved relates to place of supply, it will go to principal bench. Further, Matters which are referred to in section 171, that is anti-profiteering, will only be going to principal bench. Besides this, the government may, on recommendation of council, notify other class or classes of cases which shall again be heard only by the principal bench. Transfer subject to above jurisdiction, which we just saw. The president shall, from time to time, by general or special order, distribute the business of the tribunal among benches and may transfer cases between benches. So the president has the power to shift the cases from one bench to another. Vice president. Now, like how you have president in the principal bench, in the state bench, the highest person is the vice president. So the senior most judicial member within the state bench shall act as the vice president of that bench and shall exercise the powers of the president as may be prescribed, but for all other purposes be considered as a member. Now comes the single member bench. Now, what is a single member bench? Now, general rule is that for every case there has to be two members, one judicial, one technical. However, in some cases, even a single member can preside over your matter and give the decision. When it can do, where the tax component or the ITC involved or the amount of fine, penalty, etc. does not exceed 50 lakhs and which does not involve any question of law. So two things have to be satisfied. The amount does not exceed 50 lakhs, the tax component, and also it is not involving question of law. Then in such cases, with the approval of the president and subject to the conditions which will be given, the matter can be heard by a single bench or a single member, and in all other cases, it will be heard by a division bench, that is two members, one judicial, one technical. So the cases that can be heard by a bench of single member will be where the amount of tax or ITC or fine or fee does not exceed 50 lakhs and the matter does not involve question of law and prior approval of president has been obtained. When all these conditions are collectively satisfied, the matter can be heard by the single bench. Now comes the next point, students. The next point is that wherever there is a difference of opinion, then the majority rule will apply. So what is this majority rule? Okay, now what is the majority rule? If after hearing the case, the members differ in their opinion on any point or points, such member shall state the points on which they differ, and the president shall now refer such case for hearing, where the appeal was originally heard by member of state bench to another member of a state within the same state, or where no such other state bench is available to members of state in another state bench. So first point is this, and where the original matter was heard by members of principal bench to other members of principal bench or where no such other member is available to member of any state bench. And then finally, it will be decided by the majority opinion. Okay. Now, transfer of members for administrative efficiency. What it says, members may be shifted from one bench to another wherever it is required, considered necessary for administrative efficiency. However, a technical member state of a state bench may be transferred to the state benches only in the same state. So technical member cannot be transferred to other states. Next, defect in constitution not to render proceedings invalid. So for some reason, if there is any defect found, that will not make your proceedings invalid. Fine. Now, procedure before the tribunal. Now, first part was the constitution and the working. Now we come to the procedures. First is tribunal shall not be bound by the procedures of the civil procedure code. However, it shall be guided by the principle of natural justice and shall have power to regulate its own procedure. So first point is they will not be bound by the procedures of civil code, and they can make their own procedure. So this is again very important. And because of this, you will find students that there is a separate procedure for these matters, that is the matters of tribunal. Now, the tribunal shall have the same power as are vested in civil court under the civil procedure while trying a suit. Now, what are these powers? Now, they have powers similar to a court. What powers they have? Summoning and enforcing the attendance of a person, examining the person on oath, requiring the discovery and production of documents, receiving evidence on affidavits, then further subjecting to the provisions of 123, 124 of Indian Evidence Act, issuing commissions for examining witness, dismissing a representation for default or deciding it ex parte, setting aside any order for dismissal of any representation for default or any order passed by it ex parte and any other matter. So these are the powers which are equivalent to that of a court. Now, order of a tribunal may be enforced in the same manner as if it were a decree made by a court in a suit pending therein. So, like how the court gives order, and on the basis of the court's order, it is enforced as a decree. In the same fashion here, whatever will be the order of the court, that will also order of the tribunal, that will also be enforced as if it is a decree. All proceedings before the tribunal shall be deemed to be judicial proceedings within the meaning of section 193 and 228 and for the purpose of 196 of penal code. The appellate tribunal shall be deemed to be a civil court for the purpose of section 195 and chapter 26 of the Code of Criminal Procedure. Fine. Now next is appeal to appellate tribunal. Now how and who will file the appeal? So first, any person who's aggrieved by the order passed against him by an appellate authority or revisional authority may appeal to the appellate tribunal. Now, what is the time limit? Now, for the taxpayer, the time limit is 3 months, and here the condonation is also 3 months. So, total 6 months is there with the taxpayer, but first 3 months, and then if condonation is allowed, for condonation there is further 3 months. Most important, since the tribunals are not in operation till now, so the second part says or the date as may be notified, and the date notified is 31st of July. So 31st of July, students, is the last date for filing the appeals for orders which have been passed up to 1st May 2026. Now, the tribunal can condone delay, which will be up to further 3 months. So besides the time limit, further 3 months is the additional time limit, which is in the condonation part that is allowed. Now, what is the form? So students, here, wherever the taxpayer has to file the appeal, it will be filed in APL 05 form. So the form at the tribunal level is APL 05. Now, powers of tribunal to refuse to admit an appeal. It can refuse to admit an appeal if the tax or ITC involved, or the difference in the tax or ITC involved, or the amount of fine, penalty, etc. does not exceed 50,000. In short, for small cases where the disputed component is below 50,000, it may be rejected. Now, important memorandum of cross objection. Now, this is an interesting part, students, because this was not there at the earlier stages. The law provides for filing cross objection by the respondent. So whenever I have filed an appeal, I am the taxpayer and you are the department. So I have filed appeal. You are given the rights or powers to file cross objection. So the person who's filing appeal is the appellant, and the other person who is going to reply to the appeal is the respondent. So respondent is allowed to file counter to the appeal, which is called as cross objection. The time limit provided for this is 45 days from the date on which you are communicated that an appeal has been filed against you. You have to file your memorandum of cross objection, and there is again a further condonation of further 45 days. So beyond the original time limit of 45 days, you are allowed additional 45 days for the purpose of condonation, that is filing the appeal. Now, what is the fees for filing the appeal? The fees for filing the appeal or restoration of appeal will be rupees 1,000 for every 1 lakh of our tax or ITC involved, or the difference in tax or ITC involved, or the amount of fine, fee, or penalty determined in the order appeal against. However, the fees shall not exceed 25,000 and there will be a minimum fees of 5,000. So the fees for filing this appeal, see, this is not pre-deposit. Pre-deposit is different. The fees is for every 1 lakh, there is 1,000 rupees fees, minimum 5,000, maximum 25,000. Further, fees for filing an appeal in respect of an order not involving demand of tax interest penalty shall be 5,000. Now, there shall be no fees for application made before the tribunal for rectification of errors. Pre-deposit, again, there is a pre-deposit here. So besides the pre-deposit which you have filed earlier, here again you have to pay a pre-deposit. Now coming to department side. So if the department wants to go in appeal because the lower order was in my favor, so now the department wants to go in appeal. So they are given a time limit of 6 months. So we are having 3 months, they are having 6 months. And again, beyond 6 months, they have 3 months, which is their condonation period. Now, if the department is filing the appeal, the form for filing the appeal by the department is APL 07. And this will be their form. Such application again has to be filed electronically, but it may be again filed manually where the original order is manual. Now, such application will be dealt with by the appellant authority as if it is an appeal. Now, most important again, the department is not required to make any pre-deposit. Now, there are some common provisions in case of appeal by the aggrieved person at the department. What is this? Memorandum of cross objection. So where I am filing appeal, department will file cross objection in form APL 06. Where department is filing, I will file cross objection in APL 06. And for both, the timeline is 45 days. Now, what is the date of filing appeal? Where the order appealed against is uploaded on the common portal, a final acknowledgement indicating appeal shall be issued in form APL 02 after removal of defects, if any, and the date of issuance of the provisional acknowledgement shall be considered as date of filing appeal. If the order appealed against is not uploaded on the common portal, the appellant shall upload a certified copy of the said order within 7 days from the date of filing APL 05, APL 07 as the case may be. And then a final acknowledgement indicating appeal number shall be issued in APL 02 after removal of defects. And again, the date of provisional acknowledgement shall be considered as date of filing appeal. Where the said self-certified copy of the order is submitted, uploaded after 7 days, then in that case, the date of submitting of such self-certified copy shall be considered as the date of filing of appeals. Now, what the tribunal can do? The tribunal, after hearing both sides, may pass orders which may be confirming the original demand, modifying the demand, or dropping the demand. Further, this power, which was not there at the lower authority, at appellate authority, that power is here with tribunal. They can refer the case back to appellate authority or revisional authority or to original adjudicating authority with directions as it may think fit for a fresh adjudication. Further, tribunal may, if sufficient cause is shown, grant up to 3 adjournment to hearings of appeal to either side. The law provides again an advisory time limit of 1 year. So like how it was given to appellate authority, here for tribunal also, the advisory time limit is 1 year from the date of filing the appeal. Tribunal shall send a copy of its order to AARA, original adjudicating authority, appellant, and the jurisdictional commissioner. Again, the order passed by the tribunal is binding until unless you go to a higher forum. Rectification. Now, if after passing the order, it is found that there are some mistakes, the question is, can it be rectified? So the answer is yes. The tribunal can rectify its own order for apparent mistakes. The tribunal may amend any order passed by it so as to rectify any error apparent on the face of the record, if such error is noticed in the order by its own accord. No amendment which has the effect of enhancing or assessing or reducing a refund will be passed without providing an opportunity of being heard. And then comes withdrawal. So after filing the appeal, if the appeal is not yet admitted, you can immediately withdraw it. If it is admitted, then you can file application for withdrawal, but that application again will be heard by the appellate authority, and only if the appellate authority approves, then only you can withdraw the appeal. So students, we stop over here. We take a break. and after the break, we resume our discussion on appeals. Now we come to the point of pre-deposit. Now for filing appeals, it is important that you first put some amount as pre-deposit. Now what is the pre-deposit in case of section 107? That is the first appeal. One, whatever is the amount which you are admitting, that amount you have to pay full. So admitted amount you have to pay full, and whatever amount you are contesting, you have to pay 10% of the tax which is in dispute, subject to a maximum of rupees 20 crores, and if it is IGST, then double 40 crores. No appeal shall be filed before the appellate authority against an order under section 129(3) unless a sum equal to 25% of the penalty has been paid by the appellant. Remaining amount can only when you come to section 112, which is the tribunal appeal. Again, the rule is same. Full amount has to be paid of the admitted liability, and 10% of the remaining amount which is in dispute has to be paid, and this shall be in addition to the amount what you have already paid at 20 crore of individual tax and 40 crores collectively in case of IGST. So this is the provision of pre-deposit. Now comes a very crucial question. Can you bring in additional evidence at the appellate stage or the tribunal stage, which you had not produced before with the adjudicating authority? The first rule is the appellant shall not be allowed to produce either before the appellate authority or tribunal any such evidence, whether oral, documentary, other than the evidence which it had originally produced at the lower authority. So students, understand the ideology is simple. If you had some better evidence which could get your case favorable, you should have produced it at the lower stage itself. Why you are producing it now? We will not allow it. This is the general rule. However, this rule has exceptions. In these cases, the additional evidence will be accepted even by the appellate authority or the tribunal, which were not produced at the lower stage. First, where the adjudicating authority, that the lower authority, has refused to admit the evidence. So you were trying to give the evidence, but they had refused to accept it. Next, where the appellant was prevented by sufficient cause from producing the evidence which he was called upon to produce. So the authority wanted to admit the evidence, but you could not produce it, and you have a justifiable reason. Where the appellant was prevented by sufficient cause from producing before the authority, or as the case may be any evidence which is relevant to any ground of appeal, and where the adjudicating authority has made the order without giving sufficient opportunity to the appellant to provide the evidence. So either you could not produce the evidence, or the appellate authority did not accept the evidence, or the appellate authority did not provide you sufficient time to provide the evidence. No additional evidence shall be admitted unless the appellate authority or tribunal records the reason. So one of the conditions should be present, and that will be recorded, that because of this condition we are allowing additional evidence to be taken. Further, the appellate authority or tribunal shall not take any additional evidence unless the adjudicating authority or the officer authorized in this behalf is allowed the opportunity to examine the evidence and to produce the counter. So if I'm giving you the opportunity to bring additional evidence, I should also give opportunity to the opposite side, that is the officer, to bring its counter. Now, appearance by authorized representative. Now you all know the client may not be so much aware of the legal provisions, the court proceedings. So the client will appoint people like you and me for becoming their authorized representative. So we will be the representative for the clients. Similarly, for even department, they appoint some authorized representative. Now, who can be authorized representative? So it may be relative, employee, advocate, chartered accountant, cost accountant, company secretary, or even a GST practitioner. It is also provided that the specified indirect tax gazette officer having served for at least 2 years can also be the authorized representative. Now, what are the disqualifications? Who cannot be? One, who has been dismissed or removed from government service, who is convicted of an offense connected with any proceedings under this act, who is found guilty of misconduct, who has been adjudged as insolvent. Now, The person who is to be present as authorized representative should be qualified to represent any person for all times in cases person referred to in clause ABC and for period during which insolvency continues in case of a person referred to in clause D. So in ABC, you should whatever is mentioned in ABC, this should be present all the times. And where you are adjudged insolvent, so you cannot be the representative for the period for which the insolvency continues. Now, any person who has been disqualified under the provisions of SGST shall be deemed to be disqualified under CGST as well. Then student comes the next stage. After the tribunal's order, you can appeal to the High Court. But you have to remember one important limitation. Any matter going to the High Court can only go where the subject matter involved is a substantial question of law. Means what? Up to tribunal, you can fight issues of facts and law both. But once the tribunal stage is crossed and you have to go to the High Court and thereafter Supreme Court, at both the courts, you can only take up the matter which is a substantial question of law. Very important. Now, recently the Supreme Court in the matter of Nazir Muhammad pronounced that to be a substantial question of law, what should be present? A question of law must be debatable, not previously settled by the law of land or any binding precedents, and must have a material bearing on the decision of the case and or the rights of the parties before it, if answered either way. So this is how you decide whether a question of law is there or not and whether it is a substantial question of law. So time limit for filing appeals. Appeal to the High Court are to be filed within 180 days from the date on which the order appeal against is received. However, High Courts have the power to condone the delay. Form of appeal is APL 08, and then High Court, on being satisfied that the substantial question of law is involved, it will formulate the question and then the appeal shall be heard only on the question so formulated. However, the High Court has the power to hear the appeal on any substantial question of law if it is satisfied that the case involves such question. So first is the question raised by you. Second, the court itself can raise a question and that question will be taken up for discussion. Now, the Code of Civil Procedure relating to appeals to High Court shall apply to the appeals before the High Court in this section. The appeal shall be heard by a bench of not less than 2 judges, and the points on which they differ, if any, shall then be heard upon by one or more judges of the High Court. The final judgment on the point shall be decided by the majority. Deposit of all taxes dues is required to be met, otherwise the inherent power of High Court have to be invoked for obtaining a stay pending disposal. Then comes appeal to Supreme Court. Now, after the judgment of High Court is passed, or where you have gone to the principal bench of tribunal, in both these cases, the matter goes to Supreme Court. However, where the matter is traveling to Supreme Court from High Court, the High Court should certify that the case is fit for Supreme Court. Only then the matter can go to the Supreme Court. Again, the provisions of Code of Civil Procedure shall apply, and the Supreme Court has power to vary, confirm, or reverse the judgment of High Court. Appeal has been preferred to the High Court of Supreme Court shall be payable in accordance with the order so passed. Appeal not to be filed in certain cases. In tax dispute, the tax department is always an opposite party generally because we file the appeal. From a practical standpoint, many appeals at the Tribunal, High Court, Supreme Court are instituted by department. This section contains a provision that aims at limiting the filing of appeals by the department. So there is a monetary limit be filed by them only when the amount crosses this threshold. So what is the monetary threshold which is fixed on the department? So from their side, this is the monetary threshold. So if they want to go to GSTAT, the amount involved should be more than 20 lakhs. If they have to go to High Court, the amount involved should be more than 1 crore. And Supreme Court, if the amount involved is more than 2 crore. However, amount to be considered for applying the monetary limits for filing appeal has been explained in the below table. So this is how you will count the amount. So where the dispute pertains to the demand of tax with or without penalty, then aggregate of the amount of tax and interest, penalty only, penalty, amount of late fee, interest, penalty, and or late fee, then aggregate of all the three. Erroneous refund, amount of refund. So monetary limit shall be applied on the disputed amount of tax, interest, penalty as the case may be, in respect of which appeal is contemplated to be filed. Now, exclusions. Monetary limit specified above shall not be applicable in following circumstances. It means the department can file a appeal even though the amount disputed is below the threshold given. When this will apply, where any provision of GST law has been held to be ultra vires to the Constitution of India. So where in any order the provision of the GST law itself is held ultra vires, obviously the department will go against that, and then monetary limits will not apply. Where any rules, regulations made under the GST law have been held to be ultra vires, where any order, notification, circular, etc., issued by the government or the board has been held to be ultra vires, or where the matter is related to valuation, classification, refund, place of supply, or any other issue which is recurring in nature, where strict or adverse comments have been passed, or cost has been imposed against the government or department, or any other class of orders which it thinks necessary. So these are, you can say, students, the exceptions to the monetary limits. Now, this section is very important because it covers those orders against which appeals cannot be made. So these are non-appealable decisions or orders. So you cannot file any appeal against them. First, order of the commissioner or authority empowered to direct transfer of proceedings from one officer to another. Order pertaining to seizure or retention of books. Order sanctioning prosecution, and order passed under section 18, that is payment of tax in installments. So students, for these you cannot file appeal. So with this we complete this chapter in complete detail. Now let us go to the next topic, which is advance ruling. Now what is advance ruling? Let us first understand. So you are about to start your business, or maybe you have started the business and you are now entering into the transactions. Now, the transaction that you are entering into, you are not sure about the tax implication on those transactions. So either you are not sure about what will be the value, what will be the rate, whether exemption will apply or not. So in such cases where you are not sure about what will be the taxability of your transaction, the law provides an option that you may, before entering into the transaction, file an application seeking the understanding of the department on that. This application is called as advance ruling. So what you are doing is you are trying to take their order or ruling even before you have done that particular transaction. That is why it is called as advance. Further, you do not want to be wrong at your end, so you are taking the opinion of the department and the officer on that transaction. So that is why it is called as advance ruling. Now, the decision provided by the authority for advance ruling or appellate authority for advance ruling is on specified matters or questions related to supply goods or service undertaken or proposed to be undertaken by the applicant. Now, what are the questions for which advance ruling can be filed? If other than these, any other point is there, advance ruling is not allowed. First is classification of goods service, applicability of notification, maybe exemption notification or any other notification, then time of supply, value of supply, admissibility of ITC, then determination of final tax, whether you are required to get registered or not, whether any particular thing with respect to goods and or services amount to supply or not, that is the determination of supply itself. So for all these matters, you can apply for advance ruling. Now comes the procedure. What is the procedure? You have to make an application in the prescribed form to the authority for advance ruling, and the fees is 5,000 for each act, so total 10,000. The application, verification, all have to be completed and appropriate documents have to be attached. The AAR would send a copy of the application to the respective officer and if necessary call for relevant record from the officer. AAR may examine the application and record after hearing applicant or his authorized representative and then pass an order either accepting or rejecting the application. So the first decision is whether your application is eligible for advance ruling or not. So the first decision passes about the acceptance of the advance ruling application or the rejection. Now let us say if the application is admitted. In this case, where the question raised is already pending or decided in any proceedings in case of an appellant under any of the provisions of this law. So if your application is not uh, admitted in the cases where the question is already pending or is already decided, because again in that case it will be wrong to take your application and give any ruling. If your application is rejected only by way of speaking order, giving the reasons for rejection, and the application is not to be rejected unless an opportunity of being heard is given. Copy of order admitting or rejecting the application is to be sent to the applicant and the officer. Now, if the application is admitted, ruling has to be given within 90 days of the receipt of the application. Opportunity of being heard is to be given to the applicant, authorized representative, and the department, everyone. If there is a difference of opinion between the members of AAR, points will be referred to the member of AAAR. AAAR is Appellate Authority for Advance Ruling. If AAAR is also unable to come to a common conclusion, then it shall be deemed that no advance ruling can be given. So where there is conflict even at AAAR stage, then no ruling will be given. Copy of advance ruling duly signed by the members, certified in the prescribed manner, will be sent to the applicant and the concerned officer. Now, rectification of mistakes. The authority of advance ruling or the appellate authority can amend their own order within 6 months. Such mistakes may be noticed by the authority on its own or may be brought to the notice by the applicant or the officer. And if tax liability increases or reduces because of this rectification, the applicant has to be given an opportunity of being heard. Now, students, the most important point, whatever ruling you are getting, is it binding on you? Answer is yes. It is compulsory for you to follow whatever is given in the ruling. Most important, it is binding on you and your officer. But importantly, it is not applicable to similarly place other taxable persons. So, like me, other persons are also doing the same transaction. For them, this ruling is not binding. They may follow this or they may do as per their understanding. Now, this ruling is binding till the period when the law, fact, circumstances remain unchanged. But if there is any change in your transaction or if the law itself is changing, then this ruling will become void. Now, if obtained by fraud, suppression, or misrepresentation, it will be deemed that the ruling had never been made, an order to be passed only after hearing the applicant, and the copy of order is again to be sent to the applicant and the jurisdiction officer. So in this case, whatever ruling you had obtained, if you have given false information, fraudulent documents, forged document, the ruling will be cancelled. So that is all about advance ruling. Fine. Now we go to another chapter which covers some miscellaneous provisions. Now in this chapter, we are going to study different provisions, which you can say is now the balance chapter, which we have not studied earlier, will be now studied in this chapter. First is presumption as to documents. Whenever any documents which are produced or which are seized, there has to be some authenticity of that document that it belongs to you. Now, for this authenticity, what does section 144 says? Wherever any documents are produced by a person under the act, or it is seized from the custody or control of any person under this act, or it is received from any place outside India in the course of any proceedings, and it is tendered by the prosecution in evidence against such person or any other person who tried jointly with such person, then what does section 144 says? 144 enables a court of law to make a departure from the general principles in respect of the documents given and presume. What it presumes? First, truth of the contents. So first, whatever documents are provided by you or seized from you, it will be assumed that whatever is written in them is true. Then, if any signature is put, it will be presumed that it is in your writing until unless you prove counter. Thirdly, execution or attestation in the documents have been made by the person by whom it purports to have been so executed. Document is recovered from you. It will be assumed that the document belongs to you and the contents written in that are true and they are written by you. This is the simple presumption. Next, students, come the next issue, admissibility of microfilms or fax copies of documents and computer printouts as documents and as evidence. Now, whenever any of these things have to be produced, you need to again authenticate them. So it may be a microfilm, a fax copy, a computer printout, or information which is on some electronic media. What does 145 says? Following shall be deemed. First, a microfilm of a document or the reproduction of its images embodied in such films, whether enlarged or not. Microfilms are films containing microphotographs of a document. Such images are generally provided as negatives. For fax copies, the fax is a copy or reproduction of documents that is as true to the original source as possible. An exact copy of the document is the facsimile. Statement contained in a document and included in a printed material produced by a computer and information stored electronically. Now, for all this, what does the law says? It refers to the information stored in digital form. Fine. Such documents shall be admissible in any proceedings under this Act without further proof or production of the original as evidence of any contents of the original or of any fact stated therein of which direct evidence would be admissible. So first point says that all the above documents are accepted as evidence as good as the original. Second, as per 145 to a certificate identifying the document containing the statement and describing the manner in which it was produced shall constitute evidence of any matter stated in the certificate. So whenever a certificate is given, and what does the certificate do? It identifies the document containing the statement and describing the manner in which it was produced and gives such particulars of any device involved in production of that document as may be appropriate. Then in such cases, it will also be taken or accepted as an evidence. It may be noted that it shall be sufficient for a matter to be stated to the best of the knowledge and belief of the person stating it. Now, power to call for information and the bar on disclosure of information. We referred this section in the penalties provision. Now let us understand this. What does 151 says? A commissioner or an officer authorized by him may, by an order, direct any person to furnish information, and the information may be sought relating to any matter dealt with in connection with this act within such time, in such form, in such manner as may be prescribed. So first, section 151 empowers the commissioner or any authorized officer to seek information from. Now, bar on disclosure. No information with respect to any matter given for the purpose of section 150-51 shall, without the previous consent in writing of the concerned person or his authorized representative, be published in such manner as to enable any particulars to be identified as referring to a particular person without giving opportunity. So there is a bar on disclosure of this information. Without taking the permission, you cannot publish this information. Further, no such information shall be used for the purpose of any proceedings under the Act without giving opportunity of being heard. No restriction shall apply to the publication of any information relating to a class of taxable person if in the opinion of commission it is desirable in the public interest. So this is exception to this restriction where the commissioner may publish the information in public interest. Disclosure of information by a public servant. Now this is a very crucial point. It puts the responsibility on every public servant that they should not share, they should not disclose, they should not pass on any information which they are in possession because of their position. So if I am an officer, I have access to all of your records, but I cannot pass on these records to any other person, to your competitors. If I do so, we have already seen I am liable for imprisonment and penalty both. Now, what is the content? Information documents should be treated as confidential. So whatever information document the officer collects in accordance with the act, and all particulars which are contained in any records of evidence, all are to be considered as confidential. Now, what is the exception to this rule? 158.3 lays down that notwithstanding anything contained in 158, the following information may be disclosed. So here the officer can disclose information first for prosecution. Any particulars in respect of such statement, returns, etc., etc., for the purpose of any prosecution under Indian Penal Code or the prevention of corruption or the act or any other law for the timing in force for carrying out objects of the act, any particulars to the central government, state governments, or any person acting in implementation of the act for the purpose of carrying out the act. And third, where you can disclose for service of notice or recovery of the money. Any particulars when such disclosure is occasioned by lawful exercise under the act of any process for the service of any notice. So in all these cases, the officer can disclose or furnish the details. For furnishing information to court in a proceeding where the government is a party, for audit of tax receipts or refunds, for inquiring into the conduct of GST officer. See, these are the scenarios where the officer is allowed to provide the information. Restrictions on court. 158 overrides the provisions contained in Indian Evidence Act. It states that court shall not require any GST officer to produce before it or to give evidence before it in respect of particulars referred to in 158.1. However, this restriction will not apply in respect of subsection 3. Next comes consent-based sharing of information. Now, 158 restrict sharing of your information by the officer. However, 158A is a new provision which provides that if I have to share your information, I can do that by first taking your consent. So the following details furnished by a registered person may be shared by the common portal with such other systems as may be notified by the government in the prescribed manner. Now, what details the common portal may share? Particulars furnished in the application of registration under section 25 or in returns filed under 39 or under 44. Your registration details and all your details provided in returns. Second, particulars uploaded on the common portal for preparation of invoice. So whatever you are uploading in the e-invoice portal, that can also be shared, or whatever you are uploading as per section 68, that is in the e-waybill portal. Such other details as may be prescribed. Now, how this can be shared? For the purpose of sharing details, the consent shall be obtained of the supplier in respect of details furnished above and the recipient in respect of details furnished under B and C, only where such details includes identity information of the recipient. No action shall lie against the government or the portal with respect to any liability arising consequent to information shared under this section, and there shall be no impact on the liability to pay tax on the relevant supply as per the relevant. So firstly, these informations can be shared. For sharing this information, there will be no penalty punishment on the government, and you are not absolved from paying any tax. Let us say tomorrow, even if your information is shared, you remain liable to pay tax if there is any. Now, what is given? This section overrides the following section. Now, all these sections are overridden by 158A. The set or in is GSTR 3B or GSTR 1 or 1A, etc., with a system referred to in 158A for sharing of such information and shall communicate the consent along with the details of tax period. Okay. The common portal shall communicate the information referred to in this rule with the requesting system on the receipt from the said system. So if any other system like the custom or the income tax or any other department portal is asking, the common portal, that is the GST portal, can share or communicate the information. First, how? After taking the consent of the said person and the details of the tax period or the recipients as the case may be in respect of which information is required. Now, only for these two cases, the information sharing is allowed. Now, this provision can be helpful in many cases. How? First, where recipient of goods or services want to confirm whether supplier of goods has filed return and has paid tax This is because if the supplier does not pay tax, recovery can be made from the recipient. In such cases, after obtaining consent from supplier, the recipient can check whether supplier has filed returns and paid taxes before releasing his payment. So this system can be used in this manner by the recipient. Second, this provision will also be helpful to buyer for vendor registration, rating of vendors, and verifying credentials. Third, supplier of goods and services can just credit worthiness of recipient before giving them credit. And bankers also can use this provision while making assessment of loan applications. Next, publication of information in respect of person in certain cases. Now, what does 159 says? It gives power to the commissioner for publishing names and other particulars of a person in such cases. First, what type of information can be published? Name of a person and other particulars relating to any proceedings. So where any action is taken, it can be published. Who can publish? Commissioner can publish. What is the manner? The information shall be published in such manner as the commissioner thinks fit. When can the information be published? Now this is important. Such information shall be published if the commissioner is of the opinion that it is necessary or in the public interest to do so. Is there any additional information which can be published? Yes. So what is that? In case of firms, companies, AOP, names of their partners, directors, managing agents, secretary, treasurers, managers, or members of the AOP, as the case may be, may also be published. What is the limitation on publication of information relating to penalty? No publication under this section shall be made in relation to penalty imposed under the Act until the time for presenting an appeal to the appellate authority under 107 has expired, which is 3 months plus 1 month, and without an appeal has been presented, or the appeal, if presented, has been disposed of. So only in these two cases, information relating to penalty can be published. One, where after passing of the order, you did not file the appeal in the designated 3 plus 1 month period. Second, where you had presented the appeal has also been disposed of. In such cases, your penalty details may also be uploaded. Next is taking assistance from an expert. Section 153 enables an officer not below the rank of AC to take assistance of an expert at any stage of scrutiny, inquiry, investigation. It may be noted that such decision shall be taken having regard to the nature and complexity of the case and the interest of revenue. Next, assessment proceedings not to be invalid on certain grounds. Now, this is very, very important. What does section 160 says? It says that all these proceedings, what are they? Assessment, reassessment, adjudication, review, revision, appeal, rectification, notice, summons. They will not be held to be invalid only because there are some mistakes or defects or omission. So let us say, while issuing a notice, small mistake has been made in the name of the person, or the amount is typed wrongly, or there is a clerical mistake in the notice while making totals, or a wrong reference of section number has been given. So such mistakes will not make the entire proceedings void if such proceedings are in substance and effect in conformity with the intent and purposes of the Act. So where all other things in substance are clear and correct, only there are a few clerical errors that will not vitiate the entire proceedings. Next, when will the service of any notice communication be called in question? The service of any notice, order, or communication shall not be called in question. Means it will not be challenged if the notice order has already been acted upon by the person, or where such service has not been called in question at or in the earliest proceedings commenced, continued, or finalized pursuant to such notice. So in short, where any notice or order is given to you and it may not be given in the proper manner, and if you act against that order, communication, notice, then in that particular case, later on you cannot challenge the completeness or correctness of that order. In that case, even a defective notice will be applicable to you. Next, very important provision, students, for exams is section 161. Now, whenever any order is passed and later on it is found that there was some defect in the order, there was some mistake in the order, or there was some error and it is apparent on the face of the record. What is apparent on the face of record? Means it is clearly visible that yes, this is a mistake, no further analysis is required. On the face of the order, you can see that this is a totaling error. Wrongly, a different GST number has been put. All these things can be rectified. Now, what documents can be rectified here? Decision, order, notice, certificate, or any document. Who can rectify? The same authority who had passed that order or issued that decision can rectify. Now, what type of mistakes can be rectified? Errors or mistakes which are apparent on the face of the record. Rectification can be of error apparent. It is a settled law that a decision on a debatable point is not a mistake apparent from the record. So, where a debate is possible, where yes, no, both are possible, argument is possible, that is not a mistake apparent from record and it cannot be rectified. When does the authority rectify the mistake? One, suo moto, or when such error is brought to the notice by the GST officer, or where such error is brought to the notice by the affected person within 3 months. What is the time limit for rectification? No rectification can be made after a period of 6 months from the date of issue of such decision order. However, such timelines not apply in cases where rectification is purely in the nature of correcting a clerical, arithmetic, or typographical mistake. What type of precaution should be taken at the time of rectification? Principle of natural justice should be followed, which means that wherever the amount is increased, you have to first give a notice. Rounding off. Students, if you recall your income tax subject, over there also you have rounding off in section 288. There the rounding off is nearest to 10 rupees. Here, the rounding off of tax, interest, penalty, fine is to nearest 1 rupee. So amount containing part of rupee containing of paise, such part is 50 paise or more, you add up 1 rupee. Where it is less than 50 paise, you reduce it. So here the rounding off is up to nearest 1 rupee, whereas in income tax it is up to nearest 10 rupee. Next is power of government to make rules and regulations. 164 gives the government to make rules. Further, it gives the government the power to also pass regulations, and all these things are done obviously on recommendation of councils. Now, what are the important points? The government can make rules for all or any of the matters which by the act are required to be prescribed or in respect of which provisions are to be made by rules. Second, the rules may also be issued with retrospective effect, but not from a date earlier than the date of the provision. Rules may provide for a penalty not exceeding 10,000 for committing breach. Section 165 empowers the board to make regulations which are consistent with the act and rules made thereunder to carry out the provisions of this act. Thus, rule making power is with government and regulation making power is with the board. The government and the board has been vested with the similar power of making rules and regulations respectively under section 22 and 23 of IGST Act also. Now, after the rules, regulations, and notifications are made, they have to be laid before the houses of the parliament, and only if both the houses agree, then modification which is made by the rule regulation will come into force. Rule regulation notification should not be made. So either they may accept or they may reject. Again, similar provision of laying down the rules regulation before the houses is also provided in section 24 of the IGST. Delegation. 167 prescribes that the power conferred on any authority officer can also be exercised by other authority or officer if the commissioner so directs by way of notification, subject to conditions as may be specified. Now, many notifications have been issued in this provision to delegate the power. Next, power to issue instructions. So many times the board needs to give some instruction to their officers. So these instructions can be given by the powers of section 168. Officers and other persons employed in the implementation of the act has to observe and follow such orders. The binding nature of such order is the general authority of the government The general understanding that prevails now is that a circular is binding on officer but not on assessee. However, in case the circular is contrary to the law shall prevail. So even the officer may go against the circular. Now, different meanings are given. So 291 defines proper officer. 53 is delegation of powers by commissioner. 25(9)(b) is notification of person or class of person for UIN. 35(3) notification of class of persons to who are required to maintain books of accounts. So these are the various uh, instructions and this issued under the powers of various section. Next, 168A. Students, you should understand why this section has come only in special challenge with the government officers. Now, if there is any timeline for either passing an order or for issuing a refund or for sending a notice, if that is falling in that timeline, definitely it would lapse because the department officers were themselves not in a position to visit the department. So after that, there were multiple Supreme Court judgments, Supreme Court order giving relaxation of that 2 years period. But then the government felt the need that why not we incorporate a section in the act itself so that in future if there is any such special circumstances situation, so we ourselves can extend the timeline. So keeping that in mind, section 168 was introduced. This section is specifically covering what? The power of the government to extend timelines which are provided in the Act in respect of actions which cannot be completed or compiled with due to force measure. What is force measure? So force measures are things which are beyond your control, like situation of war, epidemics, flood, drought, fire, cyclone, earthquake, other calamities caused by nature affecting the implication of the Act. This power can be exercised retrospectively also. Then students, we come to the last part of the act, which is omission, repeal and saving. What is this? See, we all know that this act is superseding our previous acts. So prior to this, we had VAT laws, we had excise law, we had service tax laws. And you would also know that there would be multiple actions which were going on in the previous laws. Let us say some notice was issued under service tax law, some adjudication or audit was going on under the excise law. Now, when any of these actions which are provided in the earlier law, if the time limit for that action is not over, and before that, that law is replaced by a new law. A question is, what will happen to those actions? One, which were started under the old law but not completed, and the new law has come. Two, have not started, but the time limit for taking that action is still pending, and the new law has come. Now, in such cases, can you take action under the new law or can you conduct the action under the new law? The answer is no. If the action pertains to the old law, it has to be conducted, it has to be fulfilled under the provisions of the old law itself. But the challenge is on the date the GST law was notified, that is 1st July 2017, automatically all old laws got repealed. But the question is, what would happen to the actions under the old law? So in order to preserve the actions, this particular section you'll find that is omission repeal of earlier laws. So what it says that wherever there is a new law which is coming into force. Firstly, you all know service tax was implemented under Chapter 5 of Finance Act. Now, since service tax has been subsumed in GST, such provisions are no more required and hence have been omitted and are not in force. This is what service tax repealing provision is. Then section 174 says what? The following legislation stand repealed from 1st July, that is the date of commencement of CGST. Central excise, medicinal and toilet preparations, additional duties of excise, etc., etc. The repeal under 174 or amendment under 173 shall not, now this is the most important part, revive anything not in force or existing at the time of such amendment. So whatever has been done has been done. Second, affect the previous operation of the amended act or repealed act and orders or anything done or suffered thereunder. So whatever has been done and closed, that again will not be affected. Next, affect any right, privilege, obligation, liability acquired, accrued, incurred under the previous law. So there will be no change to any of the rights which you had got under the previous law. Any tax exemption granted as an incentive against investment through a notification shall not continue as privilege if the said notification is rescinded. So where the government gave some 10 years, 15 years, 20 years subsidy, that may not continue until unless if the notification is rescinded, it will not be continued. Next, there will be no effect on the tax, duty, surcharge, fine, interest, penalty as are due or may become due after the this amendment. Further, it may not affect the investigation, inquiry, verification, adjudication, and assessment or recovery proceedings which are going on. Further, it will not affect any proceedings, including that relating to appeal, review, reference instituted on or after the appointed date. So, in short, whatever actions have been taken under the old laws, that action will hold good, and wherever timelines are available for initiating the actions which were provided in the previous law, that can be initiated. So even though the previous laws have been repealed, but still the actions are preserved. That is what is the repealing clause. Then you have provisions relating to the GST portal. We call it as a common portal. The provisions are provided under 146. It says that why common portal is required, because following things will be done through the common portal: registration, payment of tax, return filing, then e-way bill and other functions. So these will be done through the common portal. This is what is provided in the Act itself. Next, Section 148 allows for special provisions for certain cases. What it says, that such procedures shall be prescribed by way of notification issued by the government, and the conditions and safeguards and the classes of registered person to whom such procedures will be applicable shall be stated. Now, what will be the procedures dealing with? It will be dealing with registration, return filing, payment of tax, and administration. Now, under this power, these following notifications have been issued. Next, there will be something called as goods and service tax rating. So depending upon how well you are complying with the law, the portal will be giving you ratings. Next, power to take samples. So wherever the commissioner or an authorized officer feels that it is necessary, they may take samples of your goods and send it for testing. 155, very important, wherever any allegation is put on you, if the allegation is pertaining to ITC, Section 155 says you have to prove the eligibility of that ITC, and the burden is completely on the taxpayer, and there is no burden on the department, but this is only relating to eligibility of ITC. Next, Section 156 deems all persons discharging the functions under this Act as public servant within the meaning of Section 21. Next, protection of action taken under this Act. What does this say? Wherever any action is taken, either by the President of Appellate Tribunal, State President, members of Tribunal, officers or employees of Tribunal, any person authorized by Tribunal, and any officer appointed under this Act. So they are empowered by the Act to take various actions like search, investigation, passing orders. So whenever they are doing it in the interest of the law, in the interest of the department, there will be no personal charges on them. Bar on jurisdiction of civil court. So taxes are civil liability. However, since tax laws generally provide a specific machinery for assessment, reassessment, etc., the jurisdiction of civil court is barred. In short, you will not go to the civil court for the taxation matters. We have our own specific mechanism. 160 provides that a copy of any order document can be provided to any person on application made by that person after paying the prescribed fees. And then 169. What does 169 does? Again, student, this is important. It provides the mechanism of serving you the notice, orders, summons, etc. What is the manner? First, giving you physically. Second, sending by registered post. Third, by mail. Fourth, by uploading it on the portal. Fifth, by publishing it in the newspaper. And last is putting it at your door or the place of business. And last, student, is the anti-profiteering clause. Now, before GST, in many cases, credit and set-off was not allowed. After GST, in the same cases, credit and set-off became allowed. Now the law says under section 171 that earlier if you're not allowed credit of, let us say, VAT because your output is service tax or excise or vice versa, and now because on both sides there is GST, credit is allowed, so definitely it means that the cost of your product or your service is to be reduced. This we complete the entire portion of GST. In our future classes, we will